Good morning, guys. This is Joel here, tuning in with you guys once again with the Kwak Brothers. Welcome the Kwak Brothers family this amazing morning over here in the suburbs of Chicago. We're having an amazing morning here. We're going to wait. We're going to wait a little bit more time for you peeps to go ahead and stop coming in. I know there's a couple more people that want to tune in, but as you guys know, Sam is actually right now, as we speak, on his way back from the airport, coming back from his mission trip from South Korea. So I'll be tuning in for you guys today. I know Sam misses you guys really bad. He might even be stopping in here, poking his head in, but I want to make sure that we're still getting your guys' questions answered. Like I said, this is about you guys and you guys only, and we want to make sure we're doing what we can to help you guys out and make sure you guys feel confident, comfortable, and happy about this new hope, that you guys can go ahead and pay down your mortgage as fast as possible. So right now it's 10:57. I'm just going to keep a couple more minutes to go ahead and get a couple of our students, of the public to go ahead and start hopping on. I know we got a couple of questions already, Mark. Welcome, Mark. Happy to see you here. But as we go ahead and get going, there he is, guys, as we speak. He's right here.
What's up, everybody? I am back.
He's back. I told you guys he was actually on his way back from South Korea.
This guy's doing really, really well. So, all right, I'll be back next Wednesday, guys. Though, Don't worry about it. I'll be back, and then Joe's gonna do really, really well.
Yeah, guys, he misses his wife, so I know he hasn't seen his wife, which is actually pregnant. So congratulations to him. So I know he was poking his head in here. Actually, that's the first time I see him. So, guys, keep on putting your questions in. Are we at the time yet? Let's see here. Couple more minutes. 10:58. We'll go ahead and get started. Like I said, guys, put your questions in. Make sure you go ahead and comment your questions in right away. I'll go ahead and start. One of the things is we are starting to have curriculum. So as we answer the questions, if there's no questions that are being put in, right today, I want to go over the top 5 things that you will need to go ahead and be able to pay down this mortgage in an average of 5 to 7 years, or just pay this down as fast as possible. So, Mark, I'm going to go ahead and get started with your question right away. I appreciate you putting that in there. Mark asks this. I'm looking to make my first investment purchase. I found a local property owner who's 71 years old and had about 8 seller finance or SFH, rental units. I need help figuring out to negotiate owner financing. I need your free seller finance course, but I'm afraid to screw this up as I have no experience. Need advice. Mark, look, sometimes you got to just take that leap of faith. I know Daniel is more geared towards the investing side of things, and that'd be tuning in on Mondays, 11 Central Standard Time. But what I can say is this, right? We were actually going over this. Sometimes it just takes that leap of faith, right? And sometimes that first time is going to be the scariest thing. Be sure to send us an email, info@thekwakbros.com, and we'll do what we can. But I'll say that, right? Sometimes it just takes that leap of faith to go ahead and just do it. I mean, the worst thing that can happen really is that you mess up, right? And that you don't get this deal. But let's say that there's another deal. Now you're more confident for the next one, Mark. So this is possible, man. I want you to know that you can do it. Worst thing that can happen is you walk in there and you go ahead and do your pitch. You do your negotiations and they say no. That is the absolute worst thing that could happen. And right, what that's going to do for you is boost your confidence. Get that first no over with, whatever the case may be. In the best case scenario, you're giving yourself a chance for them to say yes. You never know, right? So go ahead, go in there, go in with confidence. You know what you're doing. Make sure you take our seller financing course. We do have another one that's going to give you a little bit more confidence for you to know the more context, for you to be more confident. But send us an email, info@thekwakbros.com, and we'd be sure to just give you some good tips, some good advice. But like I said, the worst thing that can happen is they say no, right? And that's it. Just look at it into that mindset. You're getting started. This is your first one. As soon as you get your first one over with, every single time after that, it is going to get easier and easier. So Mark, it's a single family home. Awesome. Perfect. So yes, on a seller financing in a single family home, just go in there with confidence as much as you can. You're going to be nervous. You're going to be scared, but take that leap of faith. Just go do it. That's really all I would say. I mean, when Daniel started, when I first kind of did my first pitch on owner financing and did that, I got to know, right? But then after that, it was much easier to go in there and be able to pitch, the seller financing and negotiations and doing that, right? So go in there with confidence, go in with an expectation that they're going to say no, and most times it's going to help out, right? Because there's no expectations set. Go in there with a lot of confidence, man. That's awesome, Mark. You do your thing. Let us know how it goes. Let us know how it goes, and we'd be more than happy to help you out through that. So like I said, guys, start putting your questions in. Right now it's 11:01, so I know we're still getting a couple more students coming in. A couple of the late ones are still going to be coming in. But Mark, great question. I aspire. I appreciate that, guys. I know I didn't know that analogy, but thank you guys for letting me know what that meant. So guys, like I said, keep putting your questions in. Make sure to comment, subscribe. This is the only way that we're able to go ahead and continue to post out free content for you guys, with you guys' support. So as I see no questions coming in, I want to go over today the top 5 things that you need to go ahead and pay down your mortgage in an average of 5 to 7 years, or in this case, as fast as possible. Can be 3, can be a little bit longer, but average of 5 to 7 years. I'm gonna go ahead and take a drink of my water before I start because my mouth is already starting to get a little bit dry, so give me 1 second, guys. As I get this question a lot. I get this question a lot saying, hey, Joel, or Sam gets a lot, Daniel gets a lot, and it says, hey, Joel, what are really the simplest things? What do I just need? What do I need to make this strategy possible? I don't have the time. I don't have, this is a new strategy for me. This is a new idea. My brain is all messed up right now. Just tell me the things that I need to be able to get this done, Joel. Just tell me the things that I need, right? And here's what I say. And a lot of times you guys know the answer is going to be, it depends. But here are the just main 5 things that you will need, as I went ahead and wrote this curriculum down for you guys real quick. The number one thing, obviously, that you guys are going to go ahead and need is a very, very obvious answer, right? It's going to be a line of credit, right? Whether that's a personal line of credit, whether that's a home equity line of credit, even a credit card, right? Or even a business line of credit. Any of those 4 options, you will be able to use this strategy, use those tools to pay down your mortgage. You need a line of credit. I actually got a couple questions geared towards that too. Excuse me. And people ask me, well, what if I have someone that has the money and I ask them to borrow it? Let's say a family member is willing to lend you the money, or let's say you're willing to get the money from a private money lender, or whatever the case may be. That's going to be very tough. The way that it's set up and the way that you need to use it and schedule payments and do this and this and that, it's going to be very, very tough for that to be organized in the correct fashion. Very, very tough. So guys, you're going to need a line of credit, right? And if you can't get approved for one, then we can definitely help you guys do that. And there's different things in regards to credit and things like that that'll put you in a better position to go ahead and get approved for one. But those are the things, again, I will repeat it one more time. You guys do need a line of credit for this strategy to be able to work, whether that's the home equity line of credit, right? Whether that is a personal line of credit, whether that's a business line of credit, or whether that's a credit card. Yes, guys, you can do it with a credit card, right? It is possible. Preferably for our students, what we tell them is to, number one, the first option is an all-in-one loan, right? That's typically a little bit harder to get, but if you can get an all-in-one loan, that's amazing. It'll just automate a lot of certain things in terms of scheduling, in terms of connecting a checking account and paying with your line of credit and so forth. All-in-one loan, right, is the first option that we usually recommend. Number 2 is a HELOC, home equity line of credit. Number 3 is going to be personal line of credit, also business line of credit. Either one of those work. They're the same thing except on the business side. And then the last option is going to be the credit card, which is still possible. Guys, listen, it's still possible to be able to do this with a credit card, but if you can, go in that order. Remember, once again, I'll repeat it once more. All-in-one loan, home equity line of credit, personal line of credit or business line of credit, or the last one is with a credit card. Because remember, credit card is technically still a line of credit, right? And usually it's just a little bit harder to do it that way. Guys, like I said, we got a good amount of people here. Make sure if you guys have any questions that you're going ahead and putting them in the chat box. If not, I'll go ahead and just continue for those who are watching with the top 5 things that are needed for you guys to be able to go ahead and do this strategy effectively. All right, so the second thing, and this is a question I do get a lot in terms of, Joel, I'm living paycheck to paycheck, or I'm not making much more than what I'm spending, or Joel, I'm actually right now spending less than what I'm making in terms of finances, income, and expenses. Joel, the second thing that I would say that is needed with this strategy is going to be cash flow, right? They have that good saying, cash flow's king. And in this case, positive cash flow is going to be pretty important. Now, that is not to say that if you're in a negative cash flow, that this is not going to be possible. There are certain things with the strategy and what we teach our students to those who are in a negative cash flow that you need to be doing in order to get yourself to positive cash flow. So you can go ahead and use a line of credit to kind of consolidate your debts and then use that to kind of snowball effect into paying down smaller debts that you have. But for your mortgage, if you're wanting to attack your mortgage, right, you will need some sort of positive cash flow. Typically recommended above 15 to 20%. If you have more than that, you're set, right? You can definitely do this, no problem, no doubt about it. But guys, it is important that you do have some sort of positive cash flow if using this down to pay your mortgage on the mortgage side. Now, guys, for those who are in negative cash flow that are spending more, right, than what their expenses are, that their expenses are more than what they are bringing in terms of income, that's okay. There are certain things that you can use with this strategy, with what we teach our students, that will put you in a position where you are in a positive cash flow. If you have other debts, such as student loans, credit card debts, personal loans, any other types of debts, right, car loans, you have monthly payments on those debts, right? Those are consumer debts. You have monthly payments. And the key idea for this is sometimes it is very, very intelligent, much more efficient to get rid of those debts first before actually moving down on your mortgage. And there's a specific strategy that you can use. For example, with credit cards, if you can balance transfer and get rid of a minimum payment so that you can use that positive cash flow that you've earned by getting rid of that minimum payment to actually pay that down faster, you can do that. If you can get approved for a line of credit, and with that line of credit, you pay off your car loan or you pay off your student debt, your credit cards, and then you go ahead and put your income in that line of credit and use the same exact strategy that you would use for your mortgage for your student loans or your car loans, your credit cards. That would be perfect too. But the key idea here, if you're going towards your mortgage, you want to make sure that you do have some sort of positive cash flow, guys. So remember that. That is very important. Andre here has a question, so I'll get to his question and I'll go ahead and get back to that. So Andre asked this, what are the best banks to get line of credit? Big banks like Bank of America or Chase or banks like that, right? So big banks like Bank of America or Chase, or small banks? So Andre, that is a great question. That is a question that we get a lot. It's gonna depend, right? There are big banks out there like Chase, like Bank of America. Both of those banks actually offer pretty good line of credit products, home equity line of credit products. Don't get me wrong. They're actually on our list of recommended banks. And I'm gonna give you guys a cheat here. There are on our personal list of recommended banks that we have, kind of investigated on, and they do work pretty well with our strategy. Now, there in a lot of cases, smaller banks like credit unions, because you have a developed, a seasoned relationships with them, a lot of times they can be a better option for you. Now, it depends. If you have a good relationship with a smaller bank, right, and they'll give you a little bit of a better, let's say better repayment periods, better, draw periods and stuff like that. And let's say that they allow you to use your line of credit to, go ahead and put direct deposit into it, or they allow you to go ahead and connect your checking account, or they allow you to pay expenses directly from that line of credit. You just got to make sure you're asking the right questions, right? So it depends. It really depends. Bank of America, Chase, I know both of those work very well with this strategy. The other thing too is with a lot of local banks, one of the things that you do have to do is kind of educate them on this topic, educate them on this strategy, because a lot of times smaller banks are pretty good. And a lot of times they do want to go ahead and look for you. And if you tell them, hey, I want this line of credit, and they don't know what you're going to use them for, they kind of feel a little bit iffy on if they want to give it to you or not, or they start to question you, is this a good idea for you? But as long as you go ahead and tell them what you're using it for, and you're using it, go ahead and pay that down as fast as possible, and you kind of educate them a little bit, small banks can be a good option for you. So the key is to ask the right questions, right? And look, if you have a good relationship with a small bank, a lot of times it's going to be better for you. If you don't, then the bigger banks may be a better option for you. And don't get me wrong, both the ones that you just went ahead and said, Chase and Bank of America, those are pretty good. So if you go ahead and call them, they have pretty good HELOC products. So Andre, another question, you ask, how many percentage of credit we should use not to affect our credit history. So how many percentage, let me go ahead and drink my water real quick. Andre, if you can just clarify that question, how many percentage of a credit we should use do not affect our credit history? Okay, so if I'm understanding correctly, you're asking, right, if I do get approved for that line of credit, how much percentage should I use for it not to negatively affect my credit history? Is that correct? Let me know if that's what you're asking, Andre. That would be awesome. But if that is, I'll go ahead and answer that right now. So I would suggest that if you get approved for $100,000 in a line of credit, and I use $100,000 because I can't do math, guys. If that is the case, I would say try to stay under 40%, right, of credit utilization. So if you get approved for $100,000 in your line of credit, I'd try to stay under $40,000 if you can, right? If you can. So that's what I would say. And here's not only because your utilization will stay low, guys, but also because if we hit some sort of time of recession, if we do that, then what can happen if you're using more than 40%, if you're using 50, 60, 70, 80%, 100% of your line of credit, your bank might get scared and freeze that line of credit, and you do not want to get stuck in that position. I know there's been a lot of news coming out, and actually today, some information came out that kind of hinted towards a possible recession coming soon. So guys, if you get approved for any type of line of credit, it is recommended, right? Now it is going to depend in some cases, but it is recommended that you guys stay under 40, and if you guys can, stay under 35% of that credit, of that line of credit utilization. So I hope, Andre, perfect. I hope that answers your question. Try to stay under 40%, not only because your utilization for your personal credit will be lower, but to protect yourself, your family, because if that line of credit does get frozen and the bank calls a note like this, right, then what can happen is if you don't have that cash to pay that down right away, you may be stuck in a situation where they can't foreclose on the property, and you do not want that happening, right? And this is why it's important to get educated and really know these things. So Andre, you're doing what you're doing a great due diligence for yourself, your family, and asking amazing questions. So like I said, keynote, stay under 40% if you can, if possible. So Andre, great question. Guys, continue asking any questions if you do have any. Andre, Mark, you guys have been asking amazing questions. If not, those who are here right now, a couple of students that we have on here, where are you guys from? Where are you guys heading from? So like I said, as we continue, I'll go ahead and start answering the other, resume the curriculum that we had, but both you guys are asking some amazing questions. Kelly, awesome. Kelly's amazing. Kelly is asking amazing questions. She's been a student for a good amount of time, and she's absolutely amazing. So Kelly, let me go ahead and answer your question. You said, what is the ideal draw repayment period that we should be looking for in a HELOC or line of credit? So Kelly, that is a great question. I will say this, the longer, the better. And the reason I say that is because the more, time that you'll have to pay that down. Now, if it is a shorter repayment draw period, then you just got to make sure you're planning ahead, right? That's the only issue, but the longer, the better. I know there's banks that do, 10-year draws, that do 10-year draws, and then there's banks that have that, 10, 15, 20, 30-year repayment period. In terms of the repayment period, the ideal situation is longer, right? Because then you have that flexibility. So if they're offering a 30-year repayment period, great. If they're offering a 15, 10 repayment period, okay, that's fine. You just got to make sure that you're planning ahead. So the longer, the better, whether that's draw or repayment, because you just have more flexibility, right? That's like someone, that's like saying, because this is about the cash flow, right? That's like someone saying in terms of, let's say if you were owner finance a note, right? The longer you can go ahead and extend it, the better, right? And the other thing too is, you're not going to go, it's not like a loan to where you're paying, a set amount, a fixed amount, right? They give you a line of credit, amount that you get approved for, and then you can use it to your benefit. So to answer your question, Kelly, the longer, the better on both draw and repayment period, right? If your banks are offering really, really elongated, repayment periods, great, because now you just have more flexibility on when you can and can't do with that money. Because let's say that you do finish paying off your home in 3 to 5 years, right? and you say you have a 30-year repayment period, then you can use that money, let's say if we're in a good market, to put into properties or do other things with it, right? Leverage that line of credit to your benefit. So the longer, the better, Kelly, and that's 100%. That's a great question. Remember, the longer, the better on both draw and repayment period. But if it's lower, then if it's a little bit shorter, then you just got to make sure that you're planning ahead and that you're not going ahead and spreading yourself too thin. And if you can't make that payment by 15 years, then don't take the money out, right? Because that's not that's not a smart move. Just make sure you're not spreading yourself too thin, and you won't be able to go ahead and make that payment of that chunk of money that you take out before that time ends, right? And Kelly, I know you're great, so you'll be able to do that no problem. Awesome, Kelly. Thank you. And Kelly, over there, she's in Hawaii right now. So, guys, she's getting up early and getting to work. And Kelly's going to do amazing. I'm telling you guys, Kelly, she's doing some great things. So, Kelly, great question. I appreciate that. Back to the curriculum, guys. And before we get to it, make sure you go ahead and like it, subscribe, and make sure you guys hit that bell icon to make sure you guys get updates on when we go ahead and get our live streams. And remember, guys, when it comes to real estate investing, Daniel does do them on Mondays, Central Standard Time. For you guys that are in California, it's going to be bright and early. For you guys over in New York, on the East Coast, it's going to be a little bit later. But make sure you guys tune in every Monday for real estate investing, 11 Central Standard Time, and then Wednesdays for debt acceleration, for paying down your mortgage, paying down your debt at the same time, 11 Central Standard Time. Make sure you guys please like it. That's the only way that we're able to go ahead and continue to provide content for you guys absolutely for free. And make sure you guys go ahead and subscribe and also hit the bell icon so you guys get notified when we do post new content. That would be amazing. Appreciate you guys. We love you guys. But anyways, continuing on, the other thing, so we were at number 2, right? We're at cash flow. Number 3 in terms of the top 5 things that you need to go ahead and be able to do the strategy effectively is going to be discipline, organization, and planning, right? One of the things that I get a lot with our students that I talk to them is, because this is something that is very important, it's sensitive, it's dealing with your finances, just like tax professionals really recommend for you to plan ahead. Once you kind of get into it and you're kind of doing it, right, in terms of taxes, there's a lot of things that you can't go in the past and do. It's the same idea here. The key is to plan ahead, to look forward, to plan ahead, and make sure that you guys are organized, that you guys have a schedule in this. Now, I'll be honest with you guys, I'm not the type of guy who plans. I'm not the type of guy who is organized, really. You can ask my girlfriend now. I'm not the type that does that. But when it comes to this, it is very important that you guys organize, plan, and you guys stick to that plan moving forward. It provides just a lot of peace of mind, a lot of peace, and just knowing that this is gonna work because the numbers make sense. So you guys make sure that you guys plan, organize, and that you guys are disciplined to that plan to make sure you do this effectively, right? If you guys are kind of just doing it without a plan or without any organizational skills or tools that allow you to schedule things like that, then it's gonna be very tough to keep track. You won't know how much money you're saving. You won't know when you're gonna be done. And for all you know, you might be paying this in 25 years and you didn't know because you just didn't do a good job of planning, of organizing, of budgeting. Like I said, we have some amazing scheduling tools with our calculators and spreadsheets and stuff like that. So if you guys do want any sort of extra scheduling tools, email us at info@thekwakbros.com, and we have no problem sending that information over to you guys. Like I said, organizing, being disciplined with it, and just really having that plan ahead is super important, that you guys can go ahead and pay this down on an average of 5 to 7 years, or even faster in some cases a little longer as well. So guys, organizing, staying disciplined to it, and planning ahead is super duper important. Remember that, right? And number 4, right? And this is one that a lot of people, even like myself, and a lot of our students that have kind of thought about joining, the Kwak Brothers family or not, is going to be the actual education and the knowledge, right? A lot of times when you get into something, right, that's new, that is something different that you weren't taught, if you don't have the education, if you don't have the knowledge, it can be very scary. Guys, I know it, right? If you guys don't know, if you guys aren't educated, if you guys aren't confident, it's even sometimes scary to even take that leap of faith, right? So it's very important that you guys get educated, you know the strategy, the ins and the outs of what's going on. Guys, we want you to be educated, right? We want you guys to know exactly what's happening, right? with anything. I mean, if you think about anything in terms of real estate investing, right? You don't want to go in there and not know, not do your due diligence to learn it, right? You don't want to just go in there kind of, blindsided and, I'm just buying this, I'm doing this, right? People don't do that. It's not going to work if you're not educated, if you're not doing it the correct way. There are many ways that you can do this that people think they're doing it right, and they're not. And at the end of the day, if a recession were to hit, if something were to go wrong that they didn't think of, right, because they didn't get educated on, it can go ahead and put them in a deeper hole than when they first even started. So guys, it's important to get educated and have that knowledge, right? A lot of times when you're dealing with professionals, let's say that you were to go to a financial advisor, a lot of times they don't just tell you, do this, do this, do this. Good financial advisors will teach you. They will go ahead and show you. They will go ahead and go through it to make sure that you have the knowledge as well. And then they would go ahead and advise you from that, right? And I'm not no financial advisor, don't get me wrong, but it is very smart to go ahead and get that knowledge and get educated on how this actually works. And for those who are new, that have went ahead and are new to this live, that haven't been with us before, if you guys, a lot of the stuff that I'm saying, if it's just crazy to you guys, make sure you watch our video. It's one of our top videos on our channel on how to pay off your mortgage in 5 to 7 years. You guys, yes, you're hearing it correctly. In 5 to 7 years, how to actually pay this down faster than you ever thought was possible. Make sure you guys go ahead and watch that video. Like I said, it's one of our highest viewed videos that we have in our channel. Any other question, guys, make sure you're putting them in the chat box. I'll be going on here for, what time is it right now? It's about 11:22. We still have a good amount of time. Make sure you're going ahead and asking those questions. I want to go ahead and help you guys. This is why we're here. Don't be shy. I know I'm not the shyest person. I was going to say I'm not. But those who are shy, go ahead and just put your questions in there. No question is a stupid question. Guys, I'm the king of asking stupid questions. I ask so many stupid questions in my life, and right, if I wouldn't ask those questions, I wouldn't be able to be where I am, and I wouldn't be able to gain that knowledge, right? So make sure you guys are asking questions. None of them are dumb. Make sure you're putting them in the chat box so I can go ahead and get to them. If I don't get them, I'll go ahead and resume what I have. And the last thing, and this, guys, this is super important, right? The last thing, the fifth thing that I would say that you do need to be able to go ahead and implement this strategy effectively are going to be experts, right? People like me, people like Sam, people like Daniel that know exactly what to do, that are there to answer your questions, right? Let's say this, right? And I like to compare this in a good analogy of a doctor. Let's say that you're sick, right? Let's say that you're sick. You don't know what's going on. Those who are stubborn would say, you know what? I'm just going to go ahead and just deal with it. I can figure it out. I'm not going to go to a doctor. I don't need them, right? But those who do the right thing, they go to a doctor because they're experts. They will know what's going on, right? Same thing. If your financial situation is not looking good, if you're not feeling good, if your wallets aren't feeling good, you want to go to someone that is an expert at knowing how to do it. So this is where we come in, right? People like myself, people like Sam, we want to help you guys and really prescribe the best medicine, right? To you, a customized medicine for you that will be able to help you, right, get your financial health to a better place. So if you're sick, if something's going wrong, if you're really not feeling that good, right, the smart thing would to go to a doctor, right? That'd be the smart thing to do because they will go ahead and be able to find out what's going on. They'll be able to go ahead and prescribe the right medicine, the right medication, whatever the case may be, to help out your situation, right? That's exactly what we want to do. Now, I did not go to school for as long as doctors did, but I can tell you right now, I know that we can go ahead and help you guys, and I know that there are certain things that we want to customize for you guys that we can prescribe to help out your financial situation, right? Like I said, experts are a super, super important thing to make sure that you guys have on your corner. So if you guys have any other questions, if you guys are struggling, whatever the case may be, you have someone to go ahead and answer those questions, right? So the last thing, guys, is experts. That's super, super important. Don't forget that, all right? So, guys, like I said, put your questions in. Andre, you're welcome. Like I said, guys, thank you guys for tuning in. Thank you guys. If you guys could, make sure to like. I want to see all you guys liking this video. It's the only way that we can go ahead and continue putting out the content. It's the only way we can go ahead and continue doing the lives and so forth. I do have one announcement to make, guys, and this is really, really cool. You guys are very excited for this. we are actually doing a live retreat in Dallas, Texas. Now, if you guys are around the area and you guys are wanting to know more about what that is, what it's for, it does pertain to investing in real estate, but Sam and Daniel are gonna be one of the keynote speakers at that event. We're super, super excited. So if you guys are at all in the Texas area, in the Dallas, Texas area, or if you guys wanna fly in, it's worth it, right? Then we'd be more than happy to meet you guys. We're gonna have a meet and greet. We're gonna have some fun with our students, really meet you guys. That's really what we wanna do. So Dallas, Texas, it's October 4th. I know that, and I think it's for a couple of days. If you guys want more information on that, make sure to email us and we'd be more than happy to send you some information on the event that we will be doing. And we're actually partnering up with a couple of other investors, right? A couple other wholesalers, other investors that are amazing at what they do. So if you guys are wanting more information on that, make sure to send us an email, info@thekwakbrothers.com. All right, guys. So one of the next things that I really wanted to talk about with you guys doesn't have to do exactly with in terms of a strategy standpoint. It's one of these questions that I've gotten a lot. And I hate to tell you, I wish I didn't, right? Because here's the thing. I get a lot of students that don't take that leap of faith and don't actually start the strategy, start doing it just for the sole fact that it's different, that it's something that they weren't taught. So I get this question a lot, and it says, why isn't Joel? It's great. I think the concept is great, but why aren't more people doing it? If it's paying it down in 5 to 7 years, why aren't more people actually doing the strategy, right? If the numbers make sense and you can do it, why aren't more people doing it? Well, I'll say this. There's a good saying out there, right? If you follow, what everyone else is doing, a lot of times the results that you're going to get is very similar to what everyone else is doing, right? So that being said, if you really look at the economy of where we are here in America, where are most of us at? We have a mortgage, and a lot of us are just, kind of drowning in a lot of consumer debt, whether that's student loans, whether that's credit cards, right? Do you want to really be stuck in that same situation? No. So what do we want to do? We want to do something different, right? That's the key thing. If we continue to doing the same thing, we're going to continue getting the same results, right? And we don't want that, and we don't want that for you guys. So one of the things that I tell people a lot is there's a lot of things that we're taught, whether that's in public education, whether that's just in society, whatever the case may be, that a lot of times, if you really take a look at the economical side of it, it a lot of times benefits two entities, right? It benefits the banks and it benefits the government, right? So in this case, it's very heavily sided on the bank side. So when we get amortized loans, when we go ahead and put a mortgage of 30 years, who is it going to benefit? It's definitely not going to benefit us, right? Because we're paying hundreds of thousands and millions, billions of dollars in interest alone to these banks, right? That's why they have so much money, right? So for me, it's important that I can do what I can to switch that mindset and get that money going from the bank's pocket back to your pocket, right? If I can get just $1, I don't care how much or how little it is. If I can do that, I'm doing my job. And that's what I want you guys to know as well, right? Is that change of mindset. And that's that question I get, why isn't it taught? Because it's not benefiting the banks or the government, right? If everyone starts doing the strategy, right, the banks are not gonna make as much money. This is why when you go ahead and actually talk to banks about this, a lot of times they don't want to do it because they're not making any money out of it, right? You're actually cutting down the interest that you're giving them. So banks are very, very, the higher ups in the banks, they know this strategy. And they're trying to keep you, I know I sound like a weirdo, but they want to keep you paying that amortized interest, right? But we don't want that. We want to go ahead and make it different, right? Once we start doing something different, we're going to get different results. And those results are going to be amazing if you just have that switch in the mindset and you just tweak that, right? Have that change in mindset. Stop thinking like everyone else. Stop doing what everyone else is doing and use this strategy to effectively help you get rid of that mortgage, get rid of that debt. So that's super, super important. It's not taught, guys, because a lot of times this is not benefiting the banks nor the government, right? The less money they make, the more money goes back into the consumer's pocket, which is us, right? As people that are buying houses that are doing this situation. So Kelly, scenario or question. All right, let me go ahead and get that. Do you guys have any meetings? So Andre, you ask your questions first. Andre asked, do you guys have any meetings in Illinois? I am from Plainfield, Illinois. Plainfield, I'm very familiar with that area. So we're actually over here in Warrenville. which is really close to Naperville, Illinois. I know Plainfield is not too far out. We do have meetings regarding real estate investing 2 to 3 Saturdays a month. So I'd love to go ahead and, Andre, send me an email. I'll go ahead and send you the link so you can go ahead and join our meetup group. And we love to have you in person. We love to meet you, talk to you, help you out. So we do have local meets in the Naperville area here in Illinois Saturday, and they're completely free. We do them about 2 to 3 times a month. So if you are from Illinois, send us an email, info@thekwakbrothers.com, and I'll go ahead and send you some information on when we have our next meetup. We love to meet you. We love to help you out. We love to continue to provide you value, not only over YouTube and on social media, but also in person for those who are local. So yes, we are hosting meetups here in Illinois. Scenario and questions. So Kelly, another great question. See, and this is why Kelly's going to do so well, because she's asking some amazing questions, guys. Free, clear property, needs renovating, new roof, possible new electrical plumbing. Would it be possible to get a HELOC to do the repairs and renovations yes, so it is. Now, you just gotta, and Kelly, send me an email. We'll make sure that Daniel, because I want Daniel to look at this as well. A lot of times there's a lot of things that just in terms of detail and numbers that gotta make sense. If the numbers make sense, obviously, and if it's a good investment, then yes, of course, you can use your HELOC. Now you get in the question of, do I use it to go ahead and invest it, and put it into this for rehab, for remodeling, or do I use it to pay down your mortgage? And it just comes down to the simple fact of the calculations of what's going to go ahead and give you a better ROI, return on your investment. Or if I use this HELOC to go ahead and chunk at this loan or payment, whatever the case may be, how much money am I getting? Now, if I go ahead and make this, investment for this rehab, for this investment property, what am I gonna get back, right? Right now, Kelly, like we've said, and I'm sure you've heard it, a lot of times we are preaching a lot. In most cases, it is smarter to try and get rid of the debt first, but it will depend. And Kelly, send us an email. If Daniel hasn't looked, I know you sent us something. If Daniel hasn't looked at it, I'll make sure he looks at it. He's been super busy with planning his wedding and doing those crazy things and getting down from the airport and so forth. So send us an email and we'll go ahead and get to that, Kelly. But that's a great question. It's very just going to come to the simple fact of, what am I going to get a better return on, right? Am I going to get a better return on paying this off, or am I going to get a better return by putting into this investment property and a rehab and getting that back, right? In most cases, like I said, it's going to be geared to paying down whatever debt, because most of that time it's guaranteed. On the investment side of things, obviously you all know it's not guaranteed. So Kelly, send us an email. That's a great question. Any other questions, guys? Kelly and Andre are taking over the chat box right now. If anyone else has any more questions, make sure you go ahead and put them in the chat box as soon as you can. We're getting to 11:33 a.m. over here on my side. So we are getting close to an end. But if you guys have any more last minute questions, make sure you guys are going ahead and put them in the chat box. All right. So Mark, another question. Mark, great question. Is it a bad idea to use a HELOC for down payment? That's a great question. I know I sound like a broken robot, but send on a seller finance deal. It's going to depend. It's really going to depend. It may not be. It may not be. I mean, depends on whether it's a good deal or not. I know I keep saying it depends, but it really does. I mean, it depends what it's cash flowing. It depends what that's going to look like. If the deal is great, if it looks good, I mean, if you're cash flowing a good amount of money, why not, right? But yeah, send us an email. We'd love to take a look at the situation. In not all cases, it won't be a bad idea. I mean, it depends too. Do you have, how much equity do you have, right? Are you spreading yourself too thin? Let's say if you have a line of credit, you have, line of credit of $100,000 and you're getting higher than that 40% mark for the down payment, and then you got to go ahead and put into question, would I use this better paying on my mortgage? Same kind of like the question that Kelly asked. Is it going to be better to pay down my mortgage, or should I use this for a seller financing deal, right? So it will depend. If it's a great deal and the cash flow is absolutely amazing, right? Why not? Why not? So go ahead. That's a great question, Mark. Send us an email, and and we'll be able to go ahead and take a look at a little bit deeper in that situation, because it does depend, right? So guys, any other questions? Other than that, like I said before, I know I keep saying this a lot. If you guys could, make sure you subscribe if you haven't already. The other thing that I do want to stress to you guys that I did want to touch on the topic, if you guys have any family members or any friends or any coworkers or anyone that you know that does have a mortgage, right, which in most cases is probably going to be any and everyone that does have any type of debt, guys, don't keep this secret. Do what you can, do your due diligence, and spread the awareness that this is possible for them. If you guys have a good friend, right, make sure you guys talk about this strategy to them. We'd be more than happy, have them come on one of our lives, have them watch our video, right? It's a lot of money on the table for them. So if you guys could help, we love people that are willing to give back. Give back to those who aren't aware of that the strategy is possible. Guys, this is so possible. And if you guys know anyone that is stuck in a certain situation or that does have any debt or that has that, guys, be empathetic. Make sure you let them know. Just bring it up. Say, hey, do you have a mortgage? If they do, send them the clip of the video, right? And make sure that you guys are doing what you can to give back. That's really what we want. We want a group of students, a community that wants to give back to others. So if you know anyone that does not know about the strategy, make sure you let them know of the strategy because it's super, super important. Imagine a community where everyone has their debt paid off. That'd be amazing, right? So any other questions, guys, make sure you go ahead and tune in. I know we've gotten actually a couple more viewers that hopped on. Guys, for those who are new, new viewers, I did went ahead and go over the top 5 things needed to go ahead and pay down the mortgage. And I'll say them very quickly. You'll need a line of credit. You'll need cash flow. You need discipline, organization skills. You'll go ahead and need education. Make sure you have the knowledge, right? And you will need experts by your side. You guys will go ahead and be able to watch the, you guys will be able to go ahead and rewatch this video anyway. So if you guys are just tuning in, we are getting to the second half of this live. Make sure you go and rewatch the video because it is super, super important. For those who are new, like I said, to just the strategy and everything that I'm saying is so confusing, make sure you go ahead and search on YouTube. It's one of the top videos that will pop up, or just go in our channel and search up how to pay off your mortgage in 5 to 7 years. You guys will be able to watch that video and you guys will understand a little bit more on how this concept works and how it's possible in your situation. So make sure you guys go ahead, if you haven't watched that video, watch that first, because if you go in here, you'll be a little confused on your situation. So Kelly has another link. Can you please post a link for us so we can share and refer to our friends to your program? Yes. I'll go ahead and if I can, I don't know if you can, Dave back there, go ahead and post the link of our video of how to pay off your mortgage in 5 to 7 years. If not, I'll actually go ahead and try to get it myself. But let's see if he can go ahead and get that done. He'll go ahead and get that. He'll post the link in the chat box. If not, guys, what I'll do too is I'll go ahead and post it either in the comment section for people that are rewatching that video so that they can go ahead and share it to their loved ones, friends, families, strangers. If you meet someone in a restaurant, literally just ask them. I know this is the weirdest thing. Say, hey, do you have a mortgage? In most cases, they will. Give them the video, right? Give them the video so they can watch it. So Kelly, thank you so much for being an amazing student and allowing us to go ahead and share this knowledge and this strategy with you guys so that you guys can go ahead and give back to others. Other than that, I know we have a couple, like I said, new viewers. Make sure if you guys don't have any last second questions, that you guys make sure you put them in. I got a couple more minutes. There you go. He put them in there. Ricky, what's going on, Ricky? Ricky's a great guy. He's a good friend of ours. Make sure you guys are going ahead and putting your questions in if you do have before I go ahead and kind of wrap this up. One of the last things, like I said, that I want to remind you guys of for those who are new tuning in, Daniel and Sam will be doing a really, really cool investing retreat in Dallas, Texas. So if you guys are in the area at all of Texas, if you guys are willing to fly in, I would totally do it. So worth it. You can meet us, you can meet Sam, Daniel, and a couple of our amazing friends that are in the investing business that are very, very successful in it, right? They're not gurus, they're not any of that. They're people that are actually doing deals as we speak today. So other than that, guys, one of the last things that I've been getting in terms of the questions, just to make sure, hey, there you go. See, Catalina saying, can't wait to share this with her dad. I know, I can't either, and I want to help them out. So make sure you guys are sharing that. Other than that, guys, one of the last things that I want to go over, I've been getting this question a lot too, so I want to make sure I hit this point before I go ahead and wrap this up. For those who are kind of shopping lines of credit and looking to get approved and so forth, I had this question saying, how much should I try to get approved for? Get approved for as most possible. I know this is a little bit off topic, but I want to make sure I hit that point. If you can get approved, remember, this is a line of credit. So just because you get approved for $250,000, $150,000 doesn't mean that you need to necessarily use all of it, but you have that availability, and it's always good to just have that available for you. So Kelly, I got a personal line of credit several months ago. It came with a card to use. Not sure if we can use it like a charge or debit card and pay bills or personal expenses. Thoughts? In terms of a line of credit, in most cases, Kelly, you can. Make sure you call your bank just to clarify. You can. The only thing that might be a little bit tough is things like cash advance, right? If you try to take cash from ATM or something like that, that may be something that they go ahead and restrict. But in terms of paying actual expenses, Kelly, you should be able to. In most cases, it is going to work very, very similar to like a credit card, right? So you will be able to go ahead and pay all necessary expenses with that personal line of credit card that they give you. It will be linked to it. In most cases, like I said, in most cases, some they do restrict it. In most cases, you should be able to go ahead and pay that any sorts of bills, anything like that, just like if it were to be a debit card or anything like that. The only thing that's going to be iffy in most cases, it's going to be like cash advance or getting cash from ATM or anything like that. But if you want to go ahead and pay your expenses and bills with that, you should be able to. Awesome. All right, guys. So any last questions that you guys go ahead and have, make sure you put it in there. If not, I'm going to go ahead and wrap this baby up. Like I said, if you guys are new and you guys kind of were a little bit confused, make sure you go ahead and back and watch the video that we go ahead and put in the link down below. Other than that, if you guys have any questions regarding real estate investing, Daniel will go ahead and be back on Monday, 11 Central Standard Time. Right, he'll be on here for about 45 minutes, an hour, however long he needs to stay on there to answer your questions regarding real estate investing. He will be on here. And then I'll be back, either me or Sam will be back next Wednesday, 11 Central Standard Time, regarding the HELOC strategy, regarding how to pay off your mortgage in an average of 5 to 7 years, if not faster. So like I said, I'm going to wrap this up. If you guys have any other questions that we weren't able to get to, make sure you send us an email, info@thekwakbrothers.com. Other than that, guys, thank you so much for tuning in. We're so happy to have you guys. We're so happy to provide this value and help you guys out in what we can. And other than that, I hope you guys have a good rest of your day and enjoy the rest of your week. We're Wednesday, so we're not weekend yet. So, work hard through the week, and we'll go ahead and catch you guys in the next Q&A on Monday. Thank you guys so much, and thank you for tuning in. Have a good one, guys.